Welcome back. I'm Pratap here. Today is the 19th February 2024. In this video, let us generate the performance of high liquidity zones generated in our previous report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. And all the training lessons can be accessible from our YouTube channel. There from the home page, scroll down to the playlist Supply Demand Zone Price Action course. So click on this playlist. You will be able to access all the training lessons. I have also provided the link to this playlist in this YouTube video description. By clicking the link directly you get into this page. There you scroll down to the bottom of the page, starting from lesson 1.1. All the lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in the Telegram channel so that each time when we release a new video, you get an update at our Telegram channel. So please make use of this opportunity. Now let us get into analysis of our high liquidity zones generated in our previous report. The previous report is on last Friday. Friday, we have identified 5 high liquidity zones from daily time frame and 75 minutes time frame. And out of these 5, 2 stocks got the trades. Total we got 3 trades. And in L&T Financial Holdings, we got 2 trades, and the sale we got 1 trade, successful trades. First, let us look into those executed trades, and then we look into the remaining stocks. And let me start with L&T Financial Holding. This is a 75 minutes high liquidity zone. So let me move on to the 75 minutes time frame. So the high liquidity is a drop, 2 base candles and a drop candle, and we have follow through candles. And here we have a 15 minute zone. Let me show you in the 15 minutes time frame. We have a rally candle, 3 base candles and a drop candle. And inside this 15 minutes, we have identified 2 5-minute zones. And let me show you the 5 minutes. Let us move on to the 5 minutes time frame. How I fine tuned, let me show you. Here we have a drop candle, 1, 2, 3, 4, 5 base candles and again a drop candle. And on the top of that, again we have a ERC candle as a leg-in, and then we have 1, 2, 3, 4 base candles and again a drop candle with a gap, a small gap. It is a pro gap. And this is a fresh zone. The top one is a fresh zone. Second one is not exactly, I can say it is a fresh zone, but there are no tests in the road. All these are all rejections. See the rejection from this zone, just reached the distal line and then rejection. After that prices came down. And previously also again prices didn't go very close, but again from here, that means there is a lot of order flow is there in this area. And recently also look into this. See here, there is a strong order flow here. Just before reaching, there is a rejection. After that, there is a move down. All these are all positive indications that mostly such kind of zones, even though they look like they are tested, because the order flow is strong, there is nothing wrong in planning another trade if the risk is at our manageable level. If the risk is at manageable level. That is the point you need to understand. Okay, fine. Then what is our target? Target should be in the 15 minutes demand zone. See here what happened? Today it created a drop, base, a rally candle, but it tested the zone. So that is our entry. That means already we have a drop base rally is there. This is going to be the target. But the problem is here a drop base rally, there is a gap is there, pro gap. Because the gap is a very strong area. Let me draw the horizontal line. See, opened with a pro gap. See here. Maybe some of the orders in this week, some of the orders are consumed. But still there is a gap. And moreover, we don't know any new orders institutions are added into this area. Let me add blue color line. Okay. So how to plan our trade then? We don't know how strong this pro gap area. Prices may enter and immediately they turn back. That means we are not getting any reward. Then we have two options. Option number one, leave the trade. Option number two, use some other strategy to get the profit. Because the reward is not sufficient, if you consider the pro gap area, if you consider the actual demand zone, we get a sufficient reward. We have our 6.1% ROI is there up to this drop base rally. But the pro gap area is a dangerous one. And considering the pro gap area, you are not getting sufficient reward. You are getting only 1:1.5, something like that, or maybe 1:1. But if you are considering from the demand zone, you are getting enough reward. So in such kind of situation, what kind of decision you have to take? The best decision is use the trailing stop loss by using 1 minute demand and supply zones. Previously also, I have shown you a couple of examples where we have depended on 1 minute zones and we got good profit that time. So same strategy we are going to apply. So going for 1 minute's demand zone. See here, let me show you candle by candle. Let me use the replay bar trading views. Something wrong. Replay bar, why it is not working? Let me try again. Where is today's price? Yeah. See, this is morning at 10 o'clock today. After that, let us see candle by candle how it moved. Sorry, I think we have selected a wrong candle. Let me close and let me add again. My bad. This is, let me select yesterday's close. Yeah. So this is yesterday's close. Maybe one more candle is there. So this is yesterday's close. And today, let us see the price action. This is morning 9:15 candle. Next 9:16 candle. 9:17 candle. 9:18 candle. 919, 920. In this candle, we got the entry. So prices entered into this zone in this candle and we got the entry. Now what is the target? Because this is going to be a 15 minutes, we have, this is the demand zone, a newly created 15 minutes demand zone. This is the target, but there is a pro gap is there. Because there is a pro gap, how exactly we need to plan our trade? We are not getting enough reward, but 15 minutes zone, we are getting the reward. Because we have an ambiguity situation, we have two options. Don't plan the trade or plan the trade with trailing stop loss at 1 minute level. You should not plan 15 minutes level because it is a morning session. You didn't have enough time. See, after 10 o'clock onwards, you can plan 15 minutes level, 5 minutes level trailing stop loss. But in the morning session, when you don't have sufficient 5 minutes data, obviously you have to plan your trailing stop loss based on 1 minute only. And see the next candle, how the price is moved. We have a drop, another drop, another drop. And if you observe here, we have a drop, we have base candles, we have a drop or base candle, or we have a drop, two base candles. Either way you can consider, because this is a tiny candle. Small size candles can be considered, even it is a full body is there, still we can consider a base candle. That is what you learn. We have a drop base. So you have a drop, three base candles and a drop. So that means we have drawn our first 1 minute supply zone. If this supply zone is violated, we want to exit here. If the supply zone is not violated, next coming supply zones we will draw. See the next candle. Oh God. Again I made some mistake. Wasting time today. Okay. So this is what we are discussing. We have a drop, three base candles, or you can consider if this is a drop, two base candles. But anyway, ultimately we have a zone here. And if this value is violated, if this zone is violated, we need to exit the trade. Of course, you get minimum profit only, but profit is a profit. See, after that, what happened? Market turned and this 1 minute zone is violated. The reason here it is there is no zone created, then why such kind of price action took place? Because the price is in the pro gap area. Because the price is in the pro gap area, the buy orders in this pro gap pushed the prices up. That is the reason why we planned 1 minute trailing stop. Suppose if the supply would have been very strong, prices would have gone down further below. If prices reach near to this demand zone, we would have booked our profit. Because we don't have the clarity, because there is a pro gap area, we don't know how strong the order flow, the demand, how strong the demand order flow here. So that's why we adapted 1 minute, and here immediately we booked the profit. The moment we booked the profit, we got a profit of 2,677 rupees as per one future slot. And ROA is only 1.6%. We got only 1.6%. return on the investment as per the cost of one future slot. Maybe profit is less, our ROI is less, but anyway, we planned our trade in a clever manner, especially for booking the profit by considering the pro gap which is near to the supply zone. Why we planned? Maybe if the supply is very strong, even it would have consumed all the orders in the pro gap area. But maybe the supply is not good enough. One reason could be today's demand is very, very strong. Could be anything. Okay, but we exited our trade the moment this 1 minute zone is violated. See what happened next. Observe carefully. Because this zone is tested, existing demand already consumed some orders earlier. Now this time the zone is easily violated. Now we got an entry in the next supply zone, which is a fresh supply zone. Definitely we need to plan a trade because this is a fresh zone. Moreover, below this zone there is a pro gap is there. So by the time it might have consumed some of the demand here. So we planned a trade. So we have taken our second trade. It's not the second trade actually. This is the first trade in the another 5 minute zone. Definitely this is not the second trade. Same stock, second trade. But it is the first trade in the 5 minutes demand zone. And see what happened here. See, this 5 minute zone is pierced. With how much price? Only 5 paisa. Just 5 paisa pierced. And that means it didn't hit our stop order, because we keep some buffer. Probably our buffer could have been some 20 paisa or 30 paisa. But anyway, it is within 5 paisa compared to this. Here 176.65 paisa is the 176.65 paisa is the distal line. And the price moved above is the high of this candle is 176.70 paisa. Just 5 paisa it pierced. Definitely we are in the order. Please remember, we are within our order only. We didn't exit. When we exit, when it crosses the stop loss buffer. Now we are within this stop loss buffer. So even though the zone is pierced, we are still in the order. When we will exit, again if prices turns up and go further up and go beyond our stop loss buffer, then we need to exit our trade. But we should be very careful. From now onwards, we should be very careful. Why we should be very careful? The reason is this zone is pierced. And the chances are very less to reach this 15 minutes demand zone. The chances are very less. If it reaches, we are lucky. If it doesn't reach, there are higher chances that again prices will turn up and once again it will go beyond this. So that is the reason why the technique again we need to follow the 1 minute trailing stop loss. Even if you get small profit, we need to exit. So you should be very strict. Because the zone is pierced, that means high liquidity is gone. Probably institutions might have kept some orders just a little above this. And now they are pushing the prices down. That could be one reason. Another reason, by the time, because this is a fresh zone, even though it is pierced, it might have consumed the entire demand. If that could be another reason. Why strongly, there is a strong rejection after the zone is pierced. But whatever it is from our side, we should be very careful. So that is the reason why, see what we are doing. We are planning our trade based on our trailing stop loss. So this one we already booked. I am deleting this 1 minute zone, supply zone. Now let us focus on this trade. See, now prices are going down. Now what happened? A zone is created, 1 minute supply zone. So let us draw 1 minute supply zone. If this supply zone is violated, immediately we need to exit our trade. Maybe the profit we get is very, very minimal, but still, even 10 rupees profit is also a profit. 10 minutes profit is much better than our stop loss exit. So now our investment is protected with this. Definitely we won't get loss if this 1 minute supply zone is violated. But let us see what happened next. Again, this is just pierced. Again, this is just pierced with 5 paisa. So we are still within the trade. And then immediately came down. Just within a fraction of a second, just went and immediately it came down. Fraction of a second happened. Let us see again what happened in the next candle. Oh my God. Again made a mistake. Where are we? So we are here. Okay. I'm clicking the wrong buttons and getting a break in our discussions. Let me adjust. So we are within the trade. See the next what happened. Now again another zone is created. Rally based drop. Now this is going to be our new 1 minute supply zone. Now see again what happened, we have a drop based drop. Now we are within the profits. Now we are getting good profits now. All of a sudden the zone is pierced, now prices are coming down. We are using 1 minute trailing stop loss. At this point of time, definitely we are in a good profit levels. Let us see what happened next. Now prices came close to our 15 minutes target zone. So now you can depend on this target. Just before reaching this zone, you can exit maybe 10 paisa or 15 paisa before this zone, or maybe 5 paisa or 10 paisa, whatever it is. Now it reached the target, just 5 paisa before. That means we would have booked our profit just 10 or 15 paisa before, or maybe even 5 paisa before. So finally it reached the 15 minutes target, and you booked your profit, you exited from the trade. And after that again, because this demand is 15 minutes demand is very strong, again it pushed the price. After that anyway, this because already all these zones are pierced. Next time what happens, easily the price will go through all these zones. Now this 15 minutes zone, orders are picked up. Generally what happened from the 15 minutes, some 5 paisa, 10 paisa, 15 paisa before, the prices will be started moving. because it is a 173 rupees stock. If it is a 1,000 rupees stock, maybe instead of paisa, maybe add maybe 1 rupee or 2 rupee or 3 rupees before the orders are picked up, it would have gone. I already told you previously, generally we use 0.1% or 0.2% buffers we will keep for booking the profit before getting into the zone. Now see prices, how fast they moved up. Easily the zone is violated, completely violated. So this is what happened today. Now let me move on to the 5 minutes time frame. You will get clarity. These 5-minute zones are fully violated. This entire zone is violated. And after that again, maybe somewhere here, a new supply is created and again institutions moved the price down. But our high liquidity is gone. No more this high liquidity zone is valid. But before it become invalid, what we did, we got two successful trade. In the second trade, after reaching this 15 minutes target in this candle, just 5 minutes, 5 paisa only difference. Generally, you book your profit by adding some buffer just before entering into the zone. Let me draw the let me change the 15-minute zone. This is our 15 minutes drop base rally with hidden body. And in this candle we reached. See, everything happened within half an hour. See here, in this candle we got the trade. This is 9:30 candle and it reached the target at 9:45 candle. In less than half an hour, this entire trade is completed. And that way, and L&T Financial Holding has given a profit in the second trade. It has given a profit 10,485 rupees, which is 6.2% ROI as per one futures margin cost. And I can say the top zone is a lucky trade just because of this stop loss buffer. Just because of this stop loss buffer, we are within the trade. If you would not have used stop loss buffers, our trade would have been gone. If you are not aware of stop loss buffers, very soon you are going to learn this concept as part of our second phase of the training. Next lesson is going to be in our training program. Next lesson is going to be on odd enhancers. After that, you will be learning stop loss buffers, position size, stop loss buffers, and the risk management related concepts again, the final concepts of the risk management. You will be learning. After that, we will be completing our second phase of our training program. So this is about L&T Financial Holding, and the next successful trade we got is sale. It is a smooth trade, but it is again a dynamic concept. It's not really dynamic concept, but let me tell you what really happened here. This is a 75-minute zone. Let me go to the 75-minute zone. We have a drop candle, 4 base candles. Again, we have a drop candle. That way we have drawn. Actually, this is not a good zone to plan a trade earlier. Why it is not a good zone? Because if you look into this zone at 15 minutes time frame, This again, entire thing is again occupies rally, 2 base candles and a drop, entire thing. And look into the 5 minutes. Sorry, I was referring some other stock, not this one. Sorry for my mistake. Lot of mistakes from my side today. I was referring some other stock and saying not good zone, not this one. This is perfectly, we drawn the zone. We have a rally, we have a drop candle, 2 base candles and a drop candle. But this entry, you are getting just below this 15 minutes area or 75 minutes area. Look here. Let me tell you once again. Oops, I'm totally. What is happening to me today? Yeah. Look here. The reason why I said is what I said initially is correct. It is not a good zone. The reason is look into the 15-minute zone. We have a rally, all these are all base candles and then a drop candle. See how many base candle? Actually, it is a consolidation of the prices. So definitely this zone should be violated. And we don't have any another 15-minute zone within this area. We have base candles only in this area. After that, drop candle and another drop candle. No base candles in between. That means this zone should be violated easily. It has to be violated easily. Such kind of zones we don't plan any trade. But what happened recently is this is the one. When on Friday, last Friday, prices entered into the zone, institutions created a new 15-minute zone inside the 75. If they would not have created this 15-minute zone, easily Friday itself this zone would have been violated. But institutions created a new 15-minute zone. Previously, several times I told you, if the structure of the zone is not good, even training lesson also I clearly told in lesson 16, if a zone structure is not good, the zone will be violated. Except one condition. That one condition is institution decide to create a new zone and push the prices. If that is the case, next time when prices retraces back, we will get the trade. That is what I told you. So that is what happened on last Friday. There is a rally candle, 2 base candles and a drop candle and another follow through candle is also there. So obviously this is a good zone. Definitely we can plan a trade. This is Friday's data. But Friday, there is no retracement to this zone. But when the retracement happened, today it happened. Okay, before that what we need to check? We need to check for a 5-minute zone also inside this newly created 15-minute zone. So that is the reason why went to the 15 minutes time frame. In the 15 minutes time frame, identified a drop candle, 2 base candles and a drop candle. See today what happened? Prices just entered into the 5 minutes area. This is the 5-minute zone. Inside this 15 minutes, this 5 minutes overlapped. So entered into that. See after that the rejection and how the prices came down. After that they were again, demand is also strong. Some kind of consolidation. That means there is a fight between demand and supply. And finally, the bears won within this fight. and prices came and finally reached the 15 minutes target. What is the 15 minutes target here? This is the one. We have a leg-in base and rally candle and another follow-through candle. Okay, that is okay. This is only target point of view. We are not planning any trade here. And finally prices reached at 2 o'clock 45 minutes candle. It reached the target. When after hitting this supply zone, we got the entry. And after that, in this candle, it reached the target. That way, sale has given 10,400 rupees profit, which is 3.3% ROI. ROI is less. The reason is the margin cost of the future is higher. This is almost 3 lakhs rupees. And L&T Financial Holding also, we got the same profit, 10,485. Sale, we got 10,400, almost same profit. But in L&T Financial Holding, we got 6.2% ROI. The reason is the future margin cost is around 1,60,000 rupees. But when it comes to sale, the cost of the future is double the cost compared to L&T. That's why we got half of the ROI. There, L&T Financial Holding, we got 6.2% ROI. Here, almost half of the percentage we got. That is close to 3.3% ROI we got. So that makes the difference. But anyway, it is a successful trade, clean, but sorry for my confusion. All of a sudden, my mind was blank and I was thinking this is 75 minutes zone. I was wondering. See, there is already 75 minutes zone is there. But I ignored. Somehow my eyes is saying this is 75 minutes, the same 75 minutes, 15 minutes is also there. All of a sudden, my mind became blank and I didn't understand for some time. How this analysis is completely different, I thought. Then I was thinking it is maybe a different chart, I am confused with this. Then all of a sudden, I realized there is a zone again inside. That's why once again I went back, looked into the 75 minute zone. Then I realized this is the 15 minutes inside this. Today is my bad day. All of a sudden, something happened to my mind. Maybe too much tiredness, or maybe because a lot of time I'm spending for preparing these your reports, whatever the daily reports. Yesterday took almost 2.5 hours time for answering your Q&A session. Maybe I'm feeling a lot of stressness in the recent time. Just thinking of taking, maybe I need a break. If I take a break, again you guys will be missing these reports. That's why I'm not in a position to take some break. Okay, these are the two successful trades, L&T Financial Holding and sale. And the remaining 3 we didn't get a trade. And Bajaj Finance, finally today the prices moved up, but we didn't get a trade. Let me go to daily time frame. Because all these days, almost prices were moving near this zone only. And today, it moved up by creating a new demand zone, drop base rally. So that means we won't get a trade in this high liquidity zone in the coming days unless this newly created demand zone is broken. And this drop supply zone is pierced today. Because it is pierced, this drop base rally already got zone achievement. It proved there is again a strong order flow. So we need to forget about Bajaj Finance for next few days until this newly created demand zone is violated. Next one yesterday we got is Navin Florin. Navin Florin, actually this zone is having confluence with daily moving average. This high liquidity zone, 75 minute zone is having confluence with. So this is one plus point. The probability is very high. If prices would have reached, it could have been another successful trade today. One reason is it is a high liquidity zone. It is having a zone confluence, and how we fine tuned inside this. This is daily, right? Daily, yeah. Inside this daily, we identified a 75-minute zone. We have a drop, two base candles, again a drop. This is 75. Inside this 75, we have again a 5-minute zone. Oh, sorry, 15-minute zone, not 5. Inside 75, we have 15-minute zone, rally, 1, 2, 3, 4 base candles, again a drop with a gap, pro gap. See here. And you get better clarity when you look into 5 minutes. And finally, this is the 5-minute zone. This is a ERC candle, considering this as a leg candle, and two base candles and a drop candle. Suppose you don't want to consider this is also a base candle, then you see this is our what leg out 1, 2, 3, 4, 5, 6. So it's valid. Above 6 base candles is not a valid zone. So either way you can consider. But whatever it is, this is the high of this among these candles. In this 5 minutes, we can plan a trade. This is how I prepared. After that, one more price action close. See here, the prices came down, and again there is a rally candle. After that, with gap down, again it moved down. That means again new order flow has been added by the institutes within this area. So lot of order. I can consider this as a rejection because next candle, from the close of this candle, price is sharply down. That means a new order flow is added within this area. So my understanding is by the time prices reaches here, the demand would have been weakened and supply will catch up and it will consume the remaining demand and it will give a good profit for us. So that was the intention behind in marking this 5-minute zone and thinking it will give a good success. But anyway, today prices did not enter and we didn't get a trade. And the last stock is IOC. And IOC is a 75 minutes zone, demand zone. It is a 75 minutes demand zone. We have a rally, 3 base candles and a rally. This is the price closed. But above that, there is again supply zone is also there, rally base. That means both are high liquidity zones. This is high liquidity demand zone, this is high liquidity supply zone. So wherever we get the trading opportunity, we can plan a trade. That was the intention behind this. But today, prices didn't go to the demand zone, also did not go to the supply zone. How I fine-tuned both these demand and supply zones? Again, in 15 minutes, here we identified rally, base rally. This is a 15 minutes demand zone. There is another 15 minutes demand zone, drop, 2 base candles and a rally. This is also there. And when it comes to the supply zone, we have only one supply zone. Actually, there is one more. This is already pierced previously. So this is no more valid, this one. These 3 base candles drop, drop, base, drop. But this is the one, rally, base, drop. This is the one, a valid one. This is a 15-minute zone. Inside we identified a 5-minute zone. Here also we identified a 5-minute zone. But inside we didn't draw a 5 minutes. Why we didn't draw? We will look into 5 minutes time frame. So here we have leg candle, two base candles and a rally candle, follow through candles are there. Prices came close to the zone, but order flow, there is a strong order flow here. In this area below these candles, strong order flow. That means our 5-minute zone might be having a very strong, the fine-tuned area. See here, all these candles, prices, it is not letting it indicates, all these rejections indicates there is a strong order flow below this. Such kind of zones, always we get success, most of the times. But why we didn't draw 5-minute zone here? The reason is the structure, price structure is not very convenient here. All these are all base candles. 1, 2, 3, 4, 5, 6, 7, 8, 9. That is one reason. And another reason is if you want to consider this is a hidden, add a hidden body, you just add a hidden body. Assume you consider this is a leg candle, even though it is short candle, but assume you are considering this as a leg-in candle. Leg-in. You have 1, 2, 3, 4, 5 base candles. And if you add the hidden body from the close, if you add the hidden body, definitely this will be a rally candle. You get, because of the hidden body, it will become a rally candle. And next candle, this zone is tested. If you would have drawn a zone like this, this is the leg out candle. This is the leg. By adding the hidden body, this is the leg out candle. Next candle, again prices entered into this zone and took the orders. Because of all these reasons, because if that is the case, this is a tested zone. So that's why I didn't plan anything. First of all, candle structures itself, I am not comfortable here. All these candles are base candles. Even if you compromise and if you consider this as a leg candle, still this zone is tested. Because all these points are not favorable to us. When they are not favorable, why unnecessarily we want to take a risk? Even if we miss the trade, not a problem. But mostly such kind of zones will be violated as per our experience. So that is the reason why no trade in this zone. And I should not show this 15 minutes because I want to explain this concept to you. I just kept it. Now we are deleting. This is what we are planning actually. Because here holding the prices, see, all these candles couldn't go below this. That means strong order flow is there. This is a good demand zone, but today prices did not enter. Exactly the same way, the 5-minute supply zone also here. This is a ERC candle leg in, two base candles and a drop candle. It's a good structure. Moreover, prices were trying to enter, but this area rejection, that means already order flow started within this area. Next time when prices are entering, definitely this area, the order flow will consume the demand. By the time the prices enter into this 5-minute zone, most of the demand will be weakened and pending orders in the supply zone will push the price down. So IOC, we have both opportunities are enabled. See, even second time also prices somewhat, see here, this is the earlier, a little above the prices moved, again see the rejection. That means there is a heavy strong order flow is there in this area. See, price action clues, these are all price action clues. We will be learning price action clues in our third phase of the training program. So these are all the high liquidity zones we have generated in our previous report. So in that, today we got 2 stocks, we got the 3 trades. Hope this information will be useful to you. And let us all meet again in our next video. Thank you.